Hey, this is Sasha Evdokov, and welcome to another episode of Let's Talk Stocks, episode number 139. Now, in today's episode, I want to share with you the concept of the meta pattern. And the meta pattern is not something that I've seen discussed too often when it comes to stock trading. In fact, the term may not even be called meta pattern, but you can call it also the default pattern or the standard pattern, the consistency of the behavior of a certain pattern. And when you start looking at the meta pattern, which is the term I'll be using, and you start evaluating how it applies to, let's say, the trading day or seasonalities or federal interest rates or earnings, then you start to get a little bit more insight of where the abnormalities are and see where you can capitalize and take advantage of those moves, or where the move really should be going in the other direction. And in fact, that's when it may reverse and make some changes. So the whole point behind knowing and understanding the meta pattern is really to spot what is going to happen, or what are the differences that you can play out and take advantage of than the normal tendencies or the normal behaviors. So let me give you an example here. If we look at kind of you go into a pizza restaurant and you're looking to buy some pizza, right? Well, you typically have certain time slots where they're more busy, right? So if you're looking at, let's say, 10 a.m. all the way to 10 p.m., and you're looking at this time frame, usually they're not very busy at 10 a.m., right? So the amount of foot traffic is not very busy. And here you could say, okay, this is 12 p.m. for lunch. So they're not very busy. You might get a spike over here, and then right after lunchtime, again, things start to kind of drop out. And then again, at dinner time, they peak up, and then again, they slowly drop out. So this is what is called the meta pattern of a chain or pizza restaurant or our current situation. Now, for you, what's important to understand and recognize is where is it that you want to go and have lunch, right? If you have a huge busy area right here around 12 o'clock lunchtime, you probably don't want to go in there because it might be full or you have to wait a while. So your ideal time frame or situation is to really go in and go a little bit before that, say 11 o'clock in the morning to go have lunch, or maybe around 1 to 2 o'clock in the afternoon, right? So that's kind of the pattern that's evolved as far as foot traffic goes in a pizza place or a restaurant. And you have these things all over the place, all over your daily life. The same thing in car maintenance, you have that meta pattern where things break down. That they're just consistent time after time. You have to get you have to refill your fuel tank or your gas tank. You have to get your oil change every 3,000 to 5,000 miles. And the same thing here at restaurants, right? Now in stocks, we have the exact same kind of concept. You have meta patterns when it comes to the trading day. So if we start looking at a trading day, and the market here opens 9:30 a.m., at least Eastern time, okay, and then we close right there, 4 o'clock, okay? So when you look at the meta pattern of stocks or the trading volume that goes into it, you have a huge spike in trading volume right there at that 9:30 in the morning, okay? There's a lot of volume that comes in. Then things slowly start to die out. Now, sometimes you'll get some spikes here and there, right? The pattern changes from time to time depending on which stock you're looking at, but if you're looking at an overall market, you usually have less volume during that rest of the day or the afternoon session. There's still things that happen, there's still trades going on, but it's less than usually that beginning initial amount, okay? So you have less volume there, and then you get more volume again towards the end of the day again. So this is typically the meta pattern that happens and occurs in the market. So when you start looking at this and you start evaluating as far as volume goes right here, you start evaluating this and you start wondering, okay, well, you're getting a lot of volume right here coming up in the open, and you might say, okay, well, I need to buy that stock. It's going up, right? Because it's going up and there's volume. But the fact is that when you compare it to the previous day of its meta pattern, it may not be as high. It may be only half as much, right? It may only be a third or 2/3 as much. So the volume actually might be weaker, even though it appears like it's more volume. And the same thing if you're, let's say you're trading right here. You're trading around 2 o'clock in the afternoon. And you start trading, and then you see this volume picking up, okay? And you say, oh, people are getting in on this stock. And you say, okay, they're getting in. Maybe I should get in, volume's picking up. But this is a psychological fallacy, right? It plays mind tricks on you, because right here what happens is when people are getting in, they might actually be looking and doing a fire drill towards the end of the day, managing their positions and adjusting it for the next day or the next week. When in fact, if you're doing a day trade and you're seeing this volume pick up, it's probably not wise to get into that stock because you see this volume picking up at, 3:30, simply because it's part of that meta pattern, because you're supposed to see more volume pick up. Just like when you look at a restaurant, you're supposed to see more volume pick up around noon or lunchtime. That's just normal. That's the normal tendency. The same thing, 8, 9 o'clock in the evening, 7 o'clock in the evening, depending on when you eat dinner or the restaurant itself. You expect those things to pick up around that time, around peak season. So here on a peak day, the same thing happens. If you're looking at a peak day and you start seeing this volume start picking up speed, doesn't mean you need to go in it. That just could be the meta pattern, and it could play tricks on you. So what you need to do is compare that previous day of that same stock or indice and see how it relates, see how it compares, see that price action and behavior. So the whole point or purpose really is to know and understand that here's our meta pattern, whether it's for a certain stock, whether it's for a certain equity or indice. This is not a precise drawing, but you start looking at the bars and evaluating and know and understand that there's a default pattern. And once you get that, that doesn't mean you jump right in just because you see a higher volume spike. It just means that you need to evaluate and understand what's going on underneath the surface. So that's the first main key sign to understanding meta patterns, is relating it just like looking at a restaurant. There's peak times that people are going in, and the same thing with the market. There's peak times people are trading, whether it's in the morning, whether it's towards the close of the day. Other people are working during those hours. It could be retail traders at work. Some of them might be trading. I know, and I've talked to some traders that do a handful of trading in the afternoon because they're on their lunch break. So, you might see a little bit of a volume peak up there too. It depends on which stock and indice you're trading. But know and understand the meta pattern of your trades, your stocks that you're trading. And then once you evaluate those, then you can start looking at making some adjustments, variations, looking at the differences, looking to see what is really breaking out. Because sometimes these play tricks on you and it's not really breaking out when in fact it appears so, but it's just the meta pattern. All right, now moving forward, there are a couple of different meta patterns that you should be aware of as a trader. Okay, so when you look at trading in general, you'll have a couple different things. Okay, so we have a meta pattern, let's say for the day, something that we just kind of discussed, right? So you might have more trades in that opening segment and then a little bit dip in the afternoon, and then more trades towards the evening or towards closing time. You also have a meta pattern for the week. Okay, it could also be towards the month, right? There's a meta pattern for the month. You also have seasonality meta patterns. So based on the season, okay, there's also earnings. There's many meta patterns, right? I'm just giving you some examples. This will give you some ideas to think about the meta patterns. And even Fed announcements, okay? So all these have their own kind of meta patterns. So when we start looking at these things, what you want to do is when you look at the week, the same thing. You have a meta pattern for the week. How does it play out? Well, typically you might have some swing traders, right? On a day-to-day basis, here's our opening bell. We have a lot of trades coming in on the open. Okay, a lot of trades coming in towards the close. This is just the way things work out, right? Because you have day traders getting in, getting out, also people managing their positions. So a lot more traders. It could be day traders, could be swing traders. There's a lot of trades happening. It's just a lot of noise there. On the week, the same thing happens. So if we go from a Monday to a Friday, you probably will see somewhat of the same kind of concept, okay? So you might see a little bit more trading on Monday, and then depending on, of course, which season you're in and things like that. So these things can vary, but just to give you some insight, okay, you might see more trades on a Monday, people adjusting their position from the Friday before. So you have more adjustments here that are happening, and then a little bit dip here on, as you look on the Wednesday, maybe a little bit lighter trading. And then on Friday, people want to be out before the weekend because they don't want to be caught holding over the weekend, especially if it's a longer weekend. So you might have more selling on Fridays and things like that. So that's typically what happens here on a week basis on a meta pattern. Again, you get that dip. Just think about it logically, rationally. Think about it as your car getting an oil change. Think about it like a restaurant. What happens during the week, right? Monday, more people are making adjustments from the weekend. Friday as well. Tuesday, Wednesday, Thursday, a little bit less trades probably happening. So again, people want to get out before the weekend here on Friday, especially those week-to-week swing traders, right? On the monthly, you also have a trading pattern. So at the beginning of the month and kind of the end of the month as well, you also have those things happening. Now this one's a little bit different simply because of also option expirations as well. But let's first start at the beginning and then the end of the month, okay? At the end of the month, there's more trades that happen because all these portfolio managers have to send out reports to their investors, right? If you're a mom and pop and you sent, let's say, $100,000 to an investment company, what they do typically at the end of the month is get rid of the nasty or ugly looking positions, and then they change them up to positions that look a little more favorable, especially if they did a bad job. And then they make those adjustments, and then when they send the report out at the end of the month, then they can say, hey, your portfolio looks fine. These are the stocks. Maybe we didn't do as well, but at least they look good, right? They put like nice looking companies in there. It could be like an Apple or something else that just looks good on paper, even if they may not have made a good return. At least it looks good on paper. That's what they do. So at the end of the month, this is what happens. At the beginning of the month, again, there's some rotation that happens because of that end of the month cycle. So anyways, that happens, but you also get kind of on that third Thursday, third Friday of the month, you have those SPX, SPY, you have the IWM, the Russell, all these options are expiring. So there's a little bit more trading volume that goes around that area, okay? So you could say just a little bit more around this region. People are closing, managing their positions, adjusting their positions. So again, you have that meta pattern that happens within the month to month. So that means when you start looking and evaluating all these things, well, you should be a little more careful, just like on the day-to-day at the open or at the close, because things can reverse very quickly. On the week, the same thing. On a Monday or even early Tuesday or on a late Thursday or a Friday, right? Just like we had recently a Fed announcement. On Thursday, it pulled back a little bit, but what happened here today on Friday as it's happening? It's pulling back a lot stronger. So that's what happens. It follows through towards the next day, right? Because think of the market as keep going. Even though we're pausing for ourselves, it technically keeps going. So that's what's happening here on Friday here as we're approaching Friday here on this Thursday. And the same thing month to month. So you should be a little more cautious at the beginning and also the end and when option expiration is. Even if you're not trading options, it can move your stocks a little bit because they like to pin things to certain option strike prices. Imagine if you're a fund or a firm that has, 20,000 option contracts on a certain stock. You probably want to take additional money and move that stock so that your options aren't worthless. So that's what they do. So there's more volume and things can play tricks on you. So that's the whole point of understanding these meta patterns. So you're not caught in the noise. It's just be a little more cautious in those areas. And here, the same thing when we look at seasonality. Let me draw it this way here. So if we have January to December and we look at seasonality, right, there's usually a little bit more trading here. And as we get into the summer months, okay, so call it summer season, there's usually less trading here. And that is because all the big boys, the money managers, people are taking vacation. They trade a lot less because their schedule is different. Everybody's schedule is a little different during these summer times. The kids, you have to worry about the kids. What are the kids going to do? So it's a little bit lighter on the trading usually. So sometimes you have to be a little more cautious for the upside or the downside during that time. Typically, all this time, I'll call this winter season, and then we have summer season here. The winter season is a little more active, right? That's when people are in their groove. Think of it like school season. So season here would be school season is better for trading, okay? So think about it that way. Earnings, the same thing. When you have earnings, you have a meta pattern for earnings as well. So stocks, sometimes they'll sell off a little bit depending on the stock. Sometimes they'll power into earnings. But then after earnings, they'll either gap up or gap down. So you have these gap effects when it comes to earnings. So that's the pattern. So what do you need to be aware of? Well, be aware of the gaps. Those are the meta patterns when it comes to earnings because you have gaps. So one thing to keep in mind is you don't want to be loaded up on one side when it comes to earnings because that stock can move either to the upside or the downside. You really don't know. A stock's earnings reports can be fantastic and it still sells off. Or it could be really bad, but because the expectations are good, it can power higher. So again, it doesn't apply just because you have good earnings that you're going to get good stock price or good stock price movement. And then finally, the last one is the Fed announcement that I want to talk about. And here, as we get into the Fed announcement, most people don't care too much about the Fed announcement throughout the week up until you get into, a day or two before. And at that time, sometimes stocks flatline a little bit. So they're kind of dead. Sometimes you'll see it run up, sometimes you'll see it run down. But, from what I've seen, at least recently, it's been a little more flat, right? Because they're waiting, especially the day of. You do have exceptions. Sometimes it breaks these meta patterns for any of these things. But you do have a little bit more of a calm market. They're waiting, they're sitting on their positions. Let's just see what happens. It's only a few hours away. That's what happens throughout the day. So it's just very light, idle movements. And then when the announcement happens, it's usually a little more volatile, and then you find a direction, whether it's down or up, depending on what the announcement is, what the expectation is. But you get a little bit of that volatility. So the important point to understand here is you don't want to be trading or getting too crazy when this volatile segment happens. And this sometimes is just 5 minutes. Sometimes it's about 25 minutes or 20 minutes. Sometimes it's about an hour. But then you'll slowly start seeing it drift one way or another. But you want to be very careful here, especially if you're new. But a lot of times you can use this to your advantage. If you buy low and then it pops, you get out quickly and then it reverses and it'll continue going down, or vice versa. So a lot of variations. So anyways, these are a few meta patterns to look at as you're trading, okay? It's not all of them. There's a handful of other meta patterns, but this will give you a good starting line, a baseline for understanding what a meta pattern is and really what you should be aware of. So for example, looking at the day-to-day, just because the opening volume is large doesn't mean you need to get in if the price is moving higher, because all of a sudden it could reverse, right? Because it's supposed to have more volume at the open. So don't get caught into these things. The same thing on the weekly. So if you're seeing things skyrocket on a Friday or a Monday, or even drop on a Monday or a Friday, that could be compensation from the previous week, or from the weekend. Month to month, the same thing. The last few days of the month, the first few days of the month, those things, and also in the options time frame, those things also have a little bit more trading volume, and they can shift positions, right? So big boys might be waiting here at the end of the month or trying to hold positions, so you might see things actually even flatline sometimes, and then a lot of trading happening at the beginning of the month. So those things do happen as well. So just be aware of those little segments. Seasonality, right? So when you look at the school season, the big boys, the hedge fund managers, they have kids. They want to go on summer vacation, right? Same with me. I want to go on summer vacation, so I'll do less trading in the summer. That's just natural. And as you get back into September, October, you'll trade a little bit more. You'll put on more positions. So again, you have kind of that 2-season cycle here where the volume drops a little bit. And because with low volume, it can be a little bit more dangerous in the summer months. So again, be careful. Earnings, same thing. You have those gap ups, Fed announcements, you have kind of a dead zone here, and then maybe a little bit of volatility, and then you pick a direction. So these are the meta patterns. And it's important for you to be aware of them so that you don't jump in at the wrong time with the inappropriate decisions or making the wrong decisions based on these signals, because these signals can fake you out because you don't understand the meta pattern, right? Because it plays tricks on you thinking, oh, well, there's a lot of volume, I should get in, even though that's normal or that's standard. So what you should do is evaluate some of the things you're watching at or making trading decisions based on, and see if they have a meta pattern. Evaluate those meta patterns. Start looking at the charts, and you'll normally see on the day chart, on the weekly, the same thing on the monthly, how things change. And this is ultimately what happens. And as you start seeing these patterns, just like in restaurants, just like getting your car oil change, just like the meta pattern of brushing your teeth. Most people brush their teeth morning and night. Some other people also brush after lunch. So you'll see those times of teeth brushing spike up during those times. And here with stock trading, it's no different. There's patterns that are evolved in our trading. And if you learn to recognize those things, it's expected that you'll have certain volume or more volume in certain situations than others. All right, so thanks for joining me this week. I really hope you enjoyed the lesson. If you want to join me on a live session or a live webinar, then go ahead and sign up to my newsletter list by clicking the button right up here. When you click it, enter your name and email address on that form, and you'll be sent those newsletters along with the registration details as new webinars come up. So thanks again, and in the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.